Hi everyone, welcome to JSR Voice. Now I want to discuss with you one question as well as its solution in income from capital gain. Let us go and discuss that. In the previous classes, I discussed a few problems and its solutions. Students, if anyone wants to watch any previous lectures related to income from capital gains, you can go to my channel and there you visit playlist. You can select a playlist. There you can select income from capital gains. Then you will find all the lectures. Those are related to problem solving under income from capital gains. If you want any income from house property lectures, you can go to playlist and you can select there. Okay, hope this is clear, students, and let us go and discuss our question. So this is a question that I want to discuss with you now in the present lecture. Let us discuss it. Understanding question is very important before doing the solution because it gives us a proper understanding and then we can solve it in a proper manner and correctly. So let us go and discuss the question once. Here, this question I have taken from Hamsrala Publications, author Prem Raja. So, the question is, Sri Babuchari sold his house on 25th March. So, here Babuchari is a assessee. He sold his house. House is nothing but a building. So, it is actually for buildings, for house, for land and buildings, we should consider the period of 2 years to determine whether that asset is a short term capital asset or long term capital asset. For other assets, we are going to take 3 years period to determine whether that is short term or long term. But here for house, for buildings, we are going to consider 2 years period. Okay, if the house is used for less than 2 years period and then assessee sold it off, we are going to treat it as short term capital asset. If that asset is used for more than 2 years and asset was sold by the assessee, then we are going to treat it as long term capital asset. Let us see whether our asset is short term or long term. And he sold this house on 25th March 2024. So till 31st March 2024, that is related to our previous year. Our previous year starts from 1st April 2023 to ends on 31st March 2024. So our assessee sold this house during the previous year period for how many rupees? For 28 lakhs. So this is a selling price. Selling price is called consideration received. Next, selling expenses 10,000. Selling expenses always are given as deduction from consideration received while calculating income from capital gains. So 10,000 is selling expenditure and we are going to treat it as transfer expenditure. Both are same. Selling expenses, transfer expenses, both are same. And this house has been purchased in the year 1998 and 99. He purchased this house in which year? In the year 98 and 99. So this is before 1-4-2001. Okay. So note this point. He purchased this house before 1-4-2001. For how much price he purchased? For 2 lakhs rupees. This is a purchasing price. And as on 2001, FMV. FMV means fair market value on 2001 date. That is 2,50,000. This is useful for formula, students. Okay. You will come to know while calculating indexed cost of acquisition. And next, he has invested 5 lakhs rupees in the bonds of NHAI. So these are notified as specified securities, students. If you invest money in the bonds of NHAI, so this is eligible for reduction under section 54 EC. Okay, and he purchased a new house For how much price? For 14 lakhs. He is selling one house and he is again purchasing another house. This is eligible for reduction under section 54. Okay. So next, calculate amount of taxable capital gain for the current assessment year. They are asking us calculate what is a taxable portion of capital gain. So we should calculate it and we should show that. So this is a question, students, and this is a format that we are going to follow whenever we are going to solve this. Always columns are particulars amount, and this is a format. One by one we should write in the order, and everyone have to remember this. And on the top you should give the heading, students. Okay, always heading is computation of income from capital gains of Mr. So here we should write name of the assessee. What is the name of the assessee? Sri Babuchari. In our problem, name of the assessee is Sri Babuchari. So Sri Babuchari. Okay. For the assessment year 2024 and 25. This is a total heading that we are going to give like this on the top of the format. And here format is particulars amount, and under that we have to follow the order compulsorily. First item always is consideration received. Consideration received means selling price of the asset. What is the selling price of the asset? That will be taken here. So selling price of the asset is 28 lakhs. He sold the house for 28 lakhs. So this is a selling price. Let us record here 28 lakhs. Okay, and next minus or less selling expenses or transfer expenses. Those are given in the question, students. Selling expenses 10,000. Okay, so we are going to deduct 10,000 here. 10,000. And if we deduct 10,000 from 28 lakhs, how much we get? You should do calculation. 28 lakhs minus 10,000. So here we get 27 lakhs 90,000. Okay. So 27 lakhs 90,000. That is known as net consideration. We should give name for that. Okay. That is known as net consideration. And after this we are going to deduct either cost of acquisition or indexed cost of acquisition. When we deduct cost of acquisition, if our asset is a short-term capital asset, but here that is not short-term capital asset. He purchased in the year 98 and 99, and he is selling during previous year. He used it for more than 2 years. So that is long-term capital asset. We need to deduct indexed cost of acquisition. Okay. So I removed that cost of acquisition. And do they give indexed cost of acquisition in the question? No, they don't give. We have to calculate. Okay, there are two important formulas that we have. Any one we are going to select, and we are going to calculate indexed cost of acquisition. Model 1 is if the asset is purchased by the assessee before 1-4-2001. So in this problem, assessee purchased that house in the year 1988 and 99. So that is falling before 1-4-2001 only. So he purchased that house before 1-4-2001. We are going to take model 1 only. Okay. So model 2 is not required for us. I am going to delete that because that is useful if the asset is purchased after 1-4-2001. But here he did not purchase it after 1-4-2001. He purchased before 1-4-2001. So we are going to take first formula. Okay, I removed second model. So what is this first model? Indexed cost of acquisition. Indexed cost of acquisition is equal to original cost of the asset. Original cost of the asset we should take. What is the original cost of the asset? He purchased it for 2 lakhs. So 2 lakhs is the original cost of the asset. And FMV is how much? 2,50,000. So let us take those two. So original cost of the asset or FMV. Okay. We should take that. 2 lakhs is the original cost of the asset, or FMV of the asset on 1-4-2001, that is how much? 2,50,000. So whichever is higher, that will be selected. You can see here, whichever is higher out of those two. Okay, 2 lakhs or 2,50,000. Whichever is higher, that should be taken into account. So out of 2 lakhs and 2,50,000, which is higher? 2,50,000 is highest amount. So you are going to select that. How you select? You have to select by drawing a circle around 2,50,000, but here I am selecting by changing color. Okay, 2,50,000 I selected. And next, into previous year index. What is the previous year index here? Previous year index we should take, students. Previous year index is what? It is 348. Okay, divided by 100 we should take. Divided by 100. Okay, so you should calculate. How to calculate? 2,50,000. You should not take 2 lakhs. Out of those two, which one we selected? 2,50,000 we selected. 2,50,000 into 348 divided by 100. You take that one and calculate it. You will get 8,70,000. Is equal to 8,70,000. Okay, so how much you get? Index to cost of acquisition 8,70,000. That is our index to cost of acquisition. Let us go and record here. So index to cost of acquisition 8,70,000. And you should deduct that 8,70,000 from 27,90,000. And how much you get? 19,20,000. 19,20,000. Okay, so then again you have to deduct index to cost of improvement. But index to cost of improvement, when we calculate, whenever any additions are made to the asset. But here in this problem no additions are made, so it is nil. Index to cost of improvement is nil. If you don't want to write, you can remove that completely from here. Already I made format, that is why I am writing nil. Okay, if you write nil also like this, no issues. You can follow the format like this. Okay, so if you don't want to write it, you can remove that completely. Index to cost of improvement, you are not required to write in that place. If you want, if you write also, no problem. Okay, and you deduct nil and you will get 19,20,000 again. And then we are going to give deductions, students. Deductions under section 54. So in this problem, deductions amounts, two amounts are eligible. One is that he is purchasing a new house for 14 lakhs. That is eligible for deduction. And he is investing how much amount? 5 lakhs rupees in NHAI bonds. Those are also eligible for deduction. Okay, so two are eligible, but we can't give the deduction directly like this. We have to follow some rules and regulations. What we have to follow? We have to follow rules for deduction under section 54. Okay, what are the rules? Least of the two will be given as deduction. First one is amount of capital gain available, and second one is amount eligible for deduction. So how much? First one is amount of capital gain available. So how much capital gain is available? Let us see. Here how much is available now? Capital gain 19,20,000. That is amount of capital gain available. Okay, let us take there 19,20,000. And the amount eligible for reduction. Two amounts are eligible for reduction, students, here. So what are those two amounts here? One is 5 lakhs. plus the other one is 14 lakhs. Two amounts are eligible for reduction under section 54. Okay, 5 lakhs is investing in NHAI bonds and 14 lakhs amount of new house is purchasing. So total how much it is? 19 lakhs. 19 lakhs is eligible for reduction. Okay, 19 lakhs is eligible for reduction. Now out of these two you have to select least one, students. Least one. Okay, least one is 19 lakhs. So how to select it? You have to draw a circle around that, but here I am changing the color of that. 19 lakhs I selected, and the deduction whatever we are going to give or whatever we selected here, that should not be more than 10 crores. If it is more than 10 crores, you should give only 10 crores deduction. Okay, so here it is 19 lakhs. It is less than 10 crores, no issues, and I am going to give here 19 lakhs deduction. Okay, so 19 lakhs is a deduction under section 54. Let us go and record there. And if you want to give separately, that 54 EC 5 lakhs deduction and 14 lakhs separately you can give. Okay, if you want to give combinedly like this, it's your wish, no problem. Okay, so 19 lakhs I am going to give as deduction here. Deduction under section 54 is 19 lakhs. If you deduct 19 lakhs, you will get 20,000. Okay, 20,000 is income from capital gain. So this is a solution that we have to do for this problem. Hope you all understood. Let me show it again from question to till solution once again. This is a question, students, that I discussed with you. And this is a solution. You have to follow the format like this. You have to give heading on the top, and we actually found out income from capital gain of rupees 20,000, and this is calculation of indexed cost of acquisition. So we have two models and we selected first model. Reason I already explained while doing solution. So we calculated indexed cost of acquisition 8,70,000, and this is deduction under section 54. Okay, we followed these rules and we have given deduction under section 54, 19 lakhs rupees. At the end we got income from capital gain 20,000 rupees. This is complete solution for this problem. Hope you all understood. Share the video to other students because exams are coming soon. If anyone wants the explanation, it will be useful for those students also. If you understand the class, like it, share it and subscribe the channel. Thank you.